Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Dan Pipitone, co-founder of TradeZero America. Dan, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
All right, let's catch up here a bit. What are you seeing in terms of trading volumes in the month of September as market volatility has certainly picked back up?
It has, and you know, it's been interesting. The last 18 months or so, 2 years maybe, we haven't really dealt with the seasonality of this business. Obviously, you know, things opening back up, people traveling again this summer, we did start to see that take hold in August in particular, and for the first good half of September, I would say. But coming into the third week of September, once we got past all the holidays, we did see, you know, the volumes have been back in a way that we haven't really seen since the end of June, beginning of July.
Yeah, Dan, even anecdotally, I feel like October 1st was even that threshold for people to come back to work because the city definitely feels very different than it did over the summer and even through September. So, you know, you're absolutely right about the seasonality of it. What are your expectations for the remainder of October? There's a lot of variables out there that market participants are focusing on. There
are, but we feel that from that third week of September on, really up into the third week of November, is sort of like, you know, the time for us to really, you know, do a lot of business, have a lot of folks trade. As people are focused on the summer's over, kids are back to school, you know, travel is kind of out of the way. So as long as we continue to see kind of support from the Fed, support from the folks up in Congress, depending on what they do, as we saw today, you know, there's a hint that the debt ceiling stuff is going to be behind us, and they're going to work something out at least temporarily, and the markets are up today. So. As long as we kind of the geopolitical stuff kind of doesn't get too crazy and too loud, that I think that the trading volumes will be here for the foreseeable future.
It almost feels like trade wars 2.0, right? Every time I see a headline come across, the market reacts. What other macro factors are you looking at? I think from a fundamental perspective, people are kind of focused on the supply chain and what's happening there, how it impacts, you know, Q4 and the holiday season. Anything else you're taking a look at?
Supply chain for sure. Obviously, we're seeing some sector rotation too. You know, people have kind of been trading out of big tech for the last few weeks. We're seeing people move into financials in a real way, and also into the autos. We're seeing a lot of, to your point, you know, Tesla has really bucked the trend. You know, released numbers of a really great quarter, exceeded deliveries. So obviously, they've kind of nailed things down where the supply chain issues have been less impactful to their business. But as we look at GM, look at Ford, and some of the other folks, you know, we've seen a lot of rotation out of big tech and into those guys.
Dan, you know, it's interesting. We've been covering the STA Market Structure Conference virtually this morning, and a big theme has been retail investors. Would you say that the retail investor is leading the charge based on what you've seen?
I would. You know, retail right now, you know, 10 years ago, they would make up less than 10% of the market. Now they're at about 25%. You really understand the impact that retail has had when you look at some of the moves that the exchanges have made, like the New York Stock Exchange, like Nasdaq, like SIBO, where they're actually creating different routing pricing, different routing availability, specifically for the retail trader. As we've all heard, you know, payment for order flow is, you know, may or may not be on the table for SEC discussion as a business dynamic. But to the exchange's credit, the realization of how retail for the last couple of years has really been leading the charge and become a larger segment of the trading population. They are in the process of getting ahead of what may come down the pike with respect to payment for order flow by creating retail specific routing programs, because they see, you know, that these guys are maybe potentially here to stay, but they've definitely been impactful in a very big way over the last 2 years.
Right. And so, Dan, speaking of whether it's here to stay or not, what are your thoughts around the meme stocks? Is that just a trend or something that's around for the foreseeable future?
Well, it's definitely been a trend. And I think the democratization of finance, you know, the way that users have the ability to kind of distill and disseminate and share information, obviously is not going anywhere. Whether or not the regulators, the SEC, come around to some sort of guidance or guidelines around that type of information sharing, you know, without that, I think it's here to stay, and it's a new market dynamic that I think, you know, institutions are kind of getting their heads around and making plans to really, you know, trade with, along, or against that, the push for retail.
All right. Great to catch up with you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you.